Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We are here for Monday market moves, what happened last week in the markets, and what I expect for next week. Alrighty, last week we recorded with Vince Lanci and Justin Huhn, so be sure to check those out. Amazing episodes. And we just recorded with Garrett Goggin, a junior gold miner expert, and he runs the Golden Portfolio. That episode will come out shortly after this one, so stay tuned for that. And next week we're interviewing Jordan Roosh, Mining Stock Monkey. So the last time we had Jordan on, that was a very popular episode. So be sure to get your questions in for Jordan under the community tab. Alrighty, without further ado, let's go to the charts. Starting out as always with the S&P 500. So lost 1% last week. Amazing week, fell below this trend line. And I mean, depending on where you this is all subjective, right? But you want at least 3 points on the trend line. We got one there, one there, one there, and then that's the fourth one, and boom, it broke below it. So pretty incredible. I mean, depending on where you draw this thing, it either closed just below it, just above it, or right on it. So this trend line, if it's below it, will now act as resistance. If it's above it, it will continue to act as support. But the fact that it pierced it is significant. So support below this is now going to be on the 200 moving average. Right now, that's at 5,720. Resistance above it is going to be basically where it is now. And the 50-day moving average, which is, we'll call it 6,000. So bias on this one would be up next week, just slightly. I'd expect it to hit the 50 moving average, and then we'll kind of go from there. All right, and the Mag 7. So we're going to run through these real quick. So we got NVIDIA, Apple, Microsoft, Amazon, Google, Meta, and Tesla. And if you want to put that into an acronym, it is MAGA MNT. So maybe MAGA Mountain. I don't know. Maybe you guys can come up with a better acronym than me. NVIDIA is down 7% for the week. Apple's down 1.5%. Microsoft is down 2.75%. Amazon is down 2%. Google is down 5.2%. Meta is down 2.25%. And Tesla takes the cake, down 13.25%. So fantastic. Finally coming off the highs here. See, just a little side note, I see a bounce in Tesla here next week, so if you guys want to run some options, although I haven't checked, they're probably really expensive because I'm sure every other trader just like me sees the same thing, and they're probably going to bet it, so it's probably not profitable, but it's likely to happen. All right. Anyway, so for the new guys to the show, welcome. I see there's a lot of new subscribers, so I know a lot of you are probably in these stocks right here. And if you're in the S&P 500, so the S&P 500 has 500 stocks in it, right? And if you were to take an equal weighting of these, so 7 divided by 500 would be 1.4%. So these, if it was equal weighted, these 7 stocks would make up 1.4% of the S&P 500, right? Well, they don't. They are so huge. Some of these have market caps in the trillions. So here's NVIDIA, market cap 3.05 trillion. Yeah, just a tiny little bit, right? Have such a huge market cap, they make up 35%. So these 7 stocks make up over 1/3 of the market cap of the S&P 500, meaning that if any one of these, or God forbid all of them, have some massive down weeks, which they're having, this is going to get hit, and this is in everyone's retirement accounts and probably your 401k and what almost everyone is blindly investing in. So welcome to the club. We'll show you here how to rotate out of this when ironically you're at all-time highs or darn near there, and put it into something that's going to be the next leg up as this thing goes down. All right. Okay. Moving on. The dollar is up 0.9% for the week. I saw it going down next week. That happened for like 3 days, and then on Thursday, Friday, it just shot right up. So initial resistance is going to be this 50 moving average, this blue line, that's at 108. And then support is going to continue to be 106.50. After that, 105 on the 200-day moving average, and then 104. Bias for next week is up at least till the 50 moving average. 10-year yield I really thought we'd get a bounce here. So we're basically, last week we would have had a double bottom here, and then it just continued to fall out of bed. So we went from a yield of 4.4 down to close the week at 4.2. So quite a change here. And more importantly, not only did it go down, it broke through this 200-day moving average. So next support that I see, and it's kind of light support, is 4.13, which would just line up for a double bottom right back there. I still see this thing going to 5%, but in the short term, it looks like we got a little bit more downside. MACD, RSI are getting very low, but it looks like we got a tiny bit left in it. All right, and the 2-year yield is just south of 4%. So this is starting to make sense here, right? Long duration debt is paying a little bit more than short duration debt, right? And if we do the 10-year yield minus the 2-year yield, long duration debt, 10-year yield is paying 0.2% more than the short term. Still trading in this general channel pattern right here, kind of in the midline right here. I would expect this to go up. So I'd expect the 10-year to go up a little bit more than the 2-year next week, although it could go down as well, and the 2-year could go down. But if the 10-year went down a little bit less than the 2-year, then this chart would actually move up, which would sustain the pattern. So we'll see. And 1-month Treasury is still paying 4.3%. So think about the upside down clown world we're in right now, where you can give the government your money for 1 month in the form of a Treasury, and they'll pay you 4.3% for it, annualized, right? But you give your money to them for 10 years, and you only get 4.2%, right? Upside down clown world. All right, LQD. Now this one's pretty cool. Okay, so it got up right here. We got an alert on this, so I started watching this during the week, and I started placing little put options on this. So how did I know? How did TradingView alert me? Well, I just put a little alert, and I got another one right here for 110. So you guys can try out this software for free using the link below. You know, look at all these charts, pull up all these things that we're looking at right here for free. You don't get all of the indicators that I have on here, but if you're going to start out, I mean free, they're not going to pay you to use it, so that's about as good as it gets. Now, Vince and I, last week, we talked about this one in detail, about how to hedge your portfolio, so check out that episode, okay? Basically what we're doing is, if this has a cerveza sickness moment like we did back here in 2020, in March 2020, everyone knows what happened there, right? Look at what happened right here. Well, you're basically placing a bet for this to go down, and if it does, it's going to pay you like 20x. Meanwhile, the rest of your portfolio is also going down, but you make so much cash from this one, then you buy up some of those stocks for pennies on the dollar and write it back up. So make sure you check out that episode with Vince Lanci. It was a tremendous episode. It was big. There was lots of big things happening. You're not even going to believe how big it was. Tremendous episode. Gold is down 3.5% for the week. So really exciting about this. So I know a lot of you guys have took some profits up here. Fantastic. Good on you. Okay, now we're looking to redeploy. So for the new guys to the show, this is your zone right here. And this is the first thing that you're going to want to get after selling your NVIDIA and your Tesla and your Mag 7 stocks and your S&P 500, right? All your tech stocks, this is where it's going to go. First level of support right here is 2,800 to 2,700. I would guess it will hit in this yellow zone somewhere between 28 and 27, probably about 90% of the time. So 90% of the time, this is not the low in gold, and you're going to get an opportunity to buy it in here. Now, I drew this green one in here. I probably should have drawn an orange bar somewhere in the middle, but this is kind of our best buy zone down here. And this is from 2450 up to 2550. I would guess that gold will come down into this price range. I'm going to say like 20 to 25% of the time, maybe 1 out of 4 times, 1 out of 5 times, we actually see these levels again. And this is where I might even become interested in buying more gold. And I've got 20% of the portfolio in it right now. So, this is for the long time holders. Like, if it gets down here, you should probably buy more, right? But, if you got a really good position, then I wouldn't really think about it. But, if we get down to these stupid cheap levels, which we could, it's not impossible. then I think we need to get more. But for the new guys, this is your zone right here. And as it gets cheaper, you want to buy more. It's going to take a lot for it to get down here. We got to break the 50 moving average. We got to break the 150. And then we got to break the 200, right? And you got to get through all this price action. We're probably going to have a liquidity crisis to be able to get down there. But, you know, it might happen. Maybe we'll get lucky. All right, and a lot of funny business going on over at the LBMA, the London Gold Exchange, and the Shanghai Gold Exchange, and the COMEX. And Adrian Day just did a presentation over an hour long on what is happening with the gold in London and how China and the US have been gobbling it up. So it was basically a counter argument to what Vince and I talked about. So make sure you check out that episode. It was really interesting. I'm not going to spoil it, but you got to check it yourself out. It's at the Rule Classroom down below in the Rule Classroom Plus. So join us over at the Rule Classroom. It's my favorite price. It's free. You get to ask Rick live Q&A questions, whatever companies you want. You can even get it as an app on your phone. It's called the Mighty app. You can listen on your drive to and from work. And for more serious investors, like those of you who like to look at balance sheets, you care about the arbitrage that is going on over at the LBMA, there's the Rule Classroom Plus, and you can try that one out for free for 2 months. And after that, when you love it, which you will, it is $39 per month. I would love to see you there. Sign up with the link down below and in the pinned comment below. Alrighty, gold divided by the S&P 500. So this basically shows us what is the price of an ounce of gold in relation to one share of the S&P 500. So right now we can see we're almost at 50%. So right now it takes, the way we can think of this is you can think of it, it takes 2 ounces of gold to buy one share of the S&P 500, right? Or 1 ounce of gold will buy you half of one share of the S&P 500. Okay, so last week the ratio was 0.491. Now it's 0.478. So gold underperformed compared to the S&P 500. They both went down. Gold just went down more. Gold went down 3.5, and the S&P went down 1. You know, and this is kind of an interesting part. Like here, like I know a lot of you are like really attached to like I got to make my money from gold, but the way I look at it is like, do you really care where you make your money? Do you really care if you make your money in gold? Do you really care if you make it in copper? At least as far as me, my goal is just to make money. You know, I just want to provide an increased standard of living every year for me and my family, and that's it. My groceries don't care, and my mortgage doesn't care if I made the money from running a long on gold and a short on tech stocks. It just doesn't care. Basically, you sell overvaluation and you buy undervaluation. And I think that 5 years from now, we're going to have a moment where it's going to be like this, and it's going to be reversed. And I'll be like, hey guys, you're not going to believe this. Now it's time to trade our gold for shares of the S&P 500. You know, Steve, you don't understand. Gold goes up forever. Okay, no, it doesn't. Like, look at back here in the 1970s. I mean, we are just below this white line right here, a trade of 1 ounce of gold for one share of the S&P 500. Look at how freaking crazy it got over here, right? We could have a similar instance where we get to trade 1 ounce of gold for 4 shares of the S&P 500. I mean, like, that's insane, right? I mean, can you even imagine that? Well, it could happen, and I think it's likely. And you know, usually these things overshoot, and when they do, you know, this show is in it to win it. We're all about making money, whether that's in the S&P 500 or whether it's in gold or whether it's in copper or nickel. I don't care. I just want to get in front of the tsunami of money that is going to come and position yourself there before it comes. And when it does, sell it to the wave and then move on to the next one, right? Okay. CEF down 3.6% for the week. So it took a little bit of profits in this, put it in uranium. That was basically it. Next support levels are going to be the 200-day moving average right there. But I really like these orders right here at 2360 and 2175 for limit orders. And PHYS down 2.8% for the week. So these are like, air quotes, physical. This is a physical gold trust right here. Excuse me, getting over a cold. Down 2.8% for the week. I don't see any buys right here. I'd wait for the buy lines here at $21.20. OUNZ, I rarely bring this one up on the show just because it's so boring. This is essentially physical gold. I got into this one like 4 years ago, and I finally closed the entire position. This is basically another way to store cash. This is a way to put some of your dollars into some other commodity, in this case gold, and that's exactly what I did. And so over the course of about 4 years, at the top here, about 70%, I sold, I think, 25% or a third of the position right here, which is good for almost 50%. Then I'm out, and I moved it to cash, and I also moved it into uranium because I think uranium's cheap right now. All right, and GDX. Okay, our favorite miners ETF. So right up here, I sold 20%. I can probably take that off now. You guys have seen that for a couple of weeks. Sold about 20% of the position, just waiting for a re-rating right here. Garrett, next week's guest, made a stellar argument for this being radically undervalued, and I might be getting back into this sooner rather than later. I might just take a quick 10% bump on this and put the exact same amount of money down there, except I sold it for more, so it's a win. And look at this, we got some support right here on the 50 and the 200-day moving average. That might be kind of an interesting entry point right here. I know a lot of you guys don't like to trade this quickly like this, but that would be right around the 50% retracement. We'll see what it looks like next week. RSI is still middle of the road, so no buys right now. But yeah, a little bit of gap there. I think that'll probably fill. We'll see how this one irons out. And GDXJ down 3.5% for the week. Same kind of thing. I didn't take any profits on this one. Maybe I should have. But look at this setup with the fib rate here. So right there, perfect bounce right on the 50-day moving average and the 50% retracement. We'll see what happens here. I'd like to see like a little double bottom. We'll see how that irons out. Franco, Nevada up 3.1% for the week. So I think that was like the only gold equity that we have that was actually up. Anyways, yeah, it went up for the week. Looks like they got earnings coming out here March 10th with their other little teeny tiny dividend. If you're going to take any profits in this one, I think now is a decent time. I decided not to. I'm going to wait until their Cobre Panama asset opens back up, and then this thing is just going to re-rate overnight. And at that point, I'll probably trim or move past the point of concern, which is our favorite place to be. You own the stock for free. Wheat and precious metals up 1.3% for the week, so all-time highs. I took it off the table, and I put it in uranium. I've been in wheat and precious metals now for years. Had a nice run. It's pretty stretched here on the technicals, and I finally exited position. So these were just options that paid amazing. So those are closed. The whole position's closed for me. I would be looking to get back into this one if and when silver starts to go on a real run, because this company is very leveraged to silver, and it does very well when silver does well. And when silver's on its run from like 35, 36 bucks up to 50, I think this thing is going to do amazing. But in the meantime, I'd rather put it in uranium because uranium's really cheap right now. And Gold Royalty Corporation. All right, so here we go. Down 3.6% for the week. I think it's pretty fairly valued right now. We're just bouncing right here on the 50-day moving average. I don't really see any buys, although now that I'm zooming in on this, it kind of looks like a bit of a retracement, right? Yeah. I mean, if we brought it down there, but then we're not really using the Fibonacci correctly. Yeah, I'd just wait. I really like this buy down here at 118, 120, maybe like 121, somewhere in that range. It'll probably get down there, especially if gold gets hit. If gold continues to go down like I think it will, these are all going to get cheaper. And Origin Royalties down 2.3% for the week. So talked about this one last week. The Anglo deposit got even bigger by 3 million ounces. could be up to, I mean, talking with Adrian Day, he's like, you know, and this is what you get at the Rule Classroom is he brought up the drill holes, right? And he showed where Anglo is drilling this deposit. And you can see that they have a whole bunch of concentrated drill holes like all around the center. And then they've got these sporadic ones that are just way outside of the initial discovery zone. They are just finding gold everywhere on this project. And he's like, you know, it's at 16 million ounces now. He could see it going to 50, which is insane for a gold deposit. And these guys have a royalty on it. Okay, I just got off the phone with Patty Nickel. He's coming on the show in about a month. He's going to be out at PDAC. So if you guys are going out there, make sure you say hey, stop by the booth. But I mean, like if you just want to pay the PDAC, you know, pre-premium, we'll call it that. Like just get this thing now. You're probably going to have a run up of, you know, 5 or 10%, and then you can run a quick trade on it. But I think this is going to re-rate here probably in the next month or so, and this is just stupid cheap prices, you know. But if you want to have a limit order down for $1, that's probably where I'd put it. I might get more of this actually. All right. Oh, make sure to give a shout out to the Rule Classroom. I'm sorry, the Rule Symposium for this one. I got to meet these guys in person out at the Rule Symposium in Boca Raton, and I look forward to meeting them again. This company and this bet at the Rule Symposium like literally paid off the entire trip and then some, which was awesome. So we got the next symposium coming up again, July 7 through 11, and I'm really excited for it. It's what's really cool about this symposium. Now, if you guys have been to these conferences before, it's pretty often that you have hundreds of these companies, sometimes even thousands. And it's basically anyone that wants to pay for a booth can get in. Well, that's not the case here. You have to be in this man's portfolio, Rick Rule's portfolio right now, to make it to this symposium, right? So you got some heavy hitters coming in here. Danielle DiMartino Booth, James Grant, Naomi Prinz, right? Some heavy hitters. And they come out and do their presentations. And this is essentially everyone that's attending. So I think last year we had like 5, maybe 600 attendees. It's very small. And as far as companies, you've only got about 25 or 30 of them, right? So they're all vetted. They're all in Rick's portfolio. And that's one of the things that makes this conference so cool. Oh, there's Peter. What's up, Peter? Looking good. You have all these break-off events where the company will give a presentation. You get breakfast or lunch with it, and you get to see each of these companies that you're interested in. You get to see the presentation. You go up and talk to the CEO. You can pick their brain in the hallway for 4 days. Okay, it is really cool. That's where I really got to meet and interview Patty Nickel of Origin Royalties. So thank you, Rick, for that very much. I have got my plane tickets. I have got my hotel tickets. I've got the boat cruise tickets. I got tickets to the symposium. Yeah, it's going to be butterflies, ice cream, and unicorn kisses. And there's also a virtual event. If you can't make the live event, you can go to the virtual one for $250. It's 4 days long. It's the best bang for your buck, I think, that is humanly possible. So I hope to see you guys there. Link is down below or in the pinned comment below. All right, Barrick Gold down 3% for the week. So it had a little bounce here on Friday, but went through the 200-day moving average. I would have expected that to hold, but it didn't. So RSI is starting to break down. Looks like we're heading lower here for Barrick Gold. We got a dividend right there, paid their normal 10 cents. Excuse me. All right, Newmont down 5.5% for the week. We got some fantastic news on this one, according to Garrett Goggins. So I'm going to tease that. So make sure that you stay tuned for that one. But I may be buying more of Newmont after what he told me. I hope it's true. We'll see. We shall see. All right, Agnico Eagle is up 0.2% for the week. So best gold miner on the planet. Might actually have a bear I'm sorry, a bull flag right here come ironing out. So it'll be interesting to see if it breaks out right here. I'm not the greatest at betting these things just because like it's tough for me to bet when I see an RSI of 50. That just doesn't exactly get me excited. But yeah, we'll see. Could be a bull flag nonetheless. All right, and B2 gold is down 5.6% for the week, so it just kind of fell out of bed there. Looks like it's probably heading lower. We've said for the last year that we like $2.50 as a limit order, and that would have hit there, almost there, all the way here, and probably is going to hit, probably not next week, but I think $2.50 will hit again. And look, there's been 3 points in the last year where we've hit $2.35. So I think that is a fantastic stink bid order, and that's where I got my last one in for an option. And Equinox Gold down 5.9% for the week. So they bought Caliber Mining in an all-stock deal, so there's no premium paid. Thank you, Ross. I don't own Caliber, but that was fine by me. It looks like Los Filos is looks like it's going to be pretty good. Stupendous. There's 3 communities that they basically got to get on board, and it looks like they got 2 of them on board. Hopefully the 3rd one comes on board, and then we can open that thing up, and then we're good to go. So hopefully they'll make them an offer they can't refuse, and then we'll be up and running, and Equinox will be to the moon. G Mining Ventures up 0.5% for the week. We're past the point of concern on this. I think this is 1.5% of the portfolio, and essentially our cost basis is 0, so that's cool. If you want into this thing, I think your first limit order should be $9.33, and then after that, stink bid at $7.90. Rio 2 down 5% for the week. So this is ironing out just like we thought it would. Cup and handle pattern looks like it's starting to go. So we got right here, there's the cup. This is coming into the handle, and hopefully this goes off to the races. We'll see if that actually irons out. This is the retracement right here, and this is down to the 50%. So I got a limit order in here on Friday. It was after it hit down here. I probably would have been the order for that one. I got it in for 49.5 cents. So hopefully it hits. I think it will. I like to see it come down and then come in for a double bottom. We'll see if that actually happens. When I ran the same cup and handle over here, you guys can see this, and then down there, it didn't come in for a double bottom, but I had my limit order in beforehand. So this one I didn't. I watched to see it first, and then I put it in. So maybe it'll be off to the races. Maybe you guys already caught it at 50 cents. But that's the story with that one. Silver is down 4.6% for the week. So finally hit, where we go? And there we go. So broke through the 20-day moving average. So finally hit, thought it would have hit that last week. It didn't, but it finally did. Not only that, it broke through that, then hit the 50-day moving average. Looks like it's on its way down still. But we still have this rising 200-day moving average that is now north of $30. So that's going to be some pretty strong support right there at $30.80 for silver. So would love to see it come down, touch right there, and then maybe we'll be able to get some of these equities a little bit cheaper. Gold divided by silver. Gold outperformed by 1.1% for the week because silver was down more. Last week, the ratio was 89.5 ounces of silver to buy 1 ounce of gold. Now it's 90.4. So silver is incredibly cheap. PSLV, this is your physical silver on the stock market. That is down 4.9%. Now what's interesting is when you look at the flows of these, see, we've started to have some pretty massive volumes right here in PSLV. I mean, look at how many shares are trading hands all the times right here. And when we look at SLV, that's not the case. They're getting less volume. Now, I think the reason, and this is just, I'm going to put my tinfoil hat here on, SLV has a bunch of contracts, and they don't actually have all the silver that's redeemable in the amount that they say there is. This one, on the other hand, does. If you really wanted a 1,000-ounce bar, they would send it to you. It would be a pain, and it would probably cost you more than if you went down to your local coin shop and just bought a whole bunch of coins. but you could redeem it. With SLV, you cannot. So I think that this is a trend. I think that some big money is starting to wake up to this, and I think it's good. I think it's good. So for the new guys here, trade some of your fake tech stocks for something real like silver. All right, SIL is down 2.1% for the week. So watch the 200-day moving average right here. It fell below it and then just bounced right up. Looks like it's probably going to go lower, with silver getting dragged down into the 30s or the low 30s or $30.80. This one will probably get dragged down as well. First limit order at 32, second at $30. SILJ down 3.1% for the week. So this is a real easy way to play a whole bunch of silver miners. There's actually quite a bit of gold miners in here too. You got Core, Pan American, who else we got in there? First Majestic, not too hot on that one. Wheaton Precious Metals, that's a royalty company. But you got a lot of silver players in here and a conglomeration of one. So it's not like you're betting on like one project or one company. You're betting on a whole bunch of them. But I really like this level at $9.75, and then again at $9. You have a super stink bid down here at $8, but I don't think that will ever hit. Pan American Silver down 2.5% for the week. So I never ended up taking profits up at 25, although I hemmed and hawed for long enough. I probably should have just done it. Watch for this gap to fill around $22 to $23. I kind of like that, right around the 50 moving average, the 200 moving average. Those might be two nice entry points. Stink bid at $19. Endeavor Silver, super leveraged to the silver price, down 4.4%. Kind of follows white trend line. Seems to be fairly accurate, although it closed below it, just like the S&P 500. So still like $3 a lot. If it continues to close below this white trend line, it's probably going to hit that. And copper, paging Dr. Copper, down 0.25% for the week. So bias for this one is down. Are we actually bulling? I'm kind of looking at, is this a bull flag right here? Doesn't really look like it. What's the hit? Actually, it might be. Okay. Maybe we do have some upside for copper. Okay, let me draw this just so you guys can see. So we got that, this, and that. Okay, histogram right here. This is bigger over here, which is good. Basically, you want increasing volume going up here. Once you hit the top of it, you want decreasing volume. Now, if we get increasing volume right here, in other words, like these bars, these bars right here going higher, and it breaks above this trend line right there, that would be a bull flag breakout to the upside. But this is where I'm not that good at. It's tough for me to bet. Like, look at the RSI, 53. By the time it gets up there, it's going to be like 60. I'm just not the greatest at that. But, maybe you guys are. And, be watching that. But initially, I would say my bias is going to be down. And we have some support right here at $4.30. That will be right where the 50 and the 200 are meeting, and it looks like we're going to get a golden cross right here. So maybe I will be able to bet this. Okay, we'll see. All right. Gold divided by copper is, let's see, gold underperformed by 3.3%. It now takes 626 pounds of copper to buy 1 ounce of gold. Easiest way to play physical copper on the stock market is this one, COP.U, down 7.2% for the week. It's now at a 20% discount. So if you want to buy into a fund, remember another way to store cash is in some of these commodities, in these physical commodities. Trade some of your dollars for COP.U. You can get, okay, so for every $5 worth of copper, it only costs you $4 because it's at a 20% discount right now. That's not going to last forever, but it's lasting right now. Excuse me. Let me get some water. All right. COPX down 2.7% for the week. So I put in a put down here. That's in this account right there. A put for $38 strike price. I checked it. It got below that actually, but it never hit. Nobody took it. So we'll see if we get a bounce here. If not, I'll just run it again. That one expires March 17th, I think, or 21st. Can't remember. Excuse me. All right. COPJ is down 4.6% for the week. So I debated moving out of this and then just putting it into like selling puts in COPX. I haven't done that yet. But still have limit orders here for 1775, 1735, and 1655. I like those levels a lot. They line up really nicely back here. Freeport is down 0.2% for the week. So still in a downtrend. Should probably make this arrow red, actually. There we go. That's a lot better. If it was up, it'd be green. Yeah, so I like these limit orders right here at $36 and then down there at 33, lining up with just some back support, looking great. Monduro Capital, nothing new here, just still waiting on BHP to hit a drill hole, down 3.4% for the week. And the deal of the week, uranium, down 0.6% for the week. So recorded with Justin Huhn last week. It was a fantastic episode. A lot of great things. Tremendous. Best episode ever recorded. American people will not even believe how great this episode was. I didn't even believe it. I recorded it. It's fantastic. So check that one out. Got a lot of positive feedback on that one. And gold divided by uranium now takes 44 pounds of uranium to buy 1 ounce of gold. So this is very cheap. Yeah, uranium's cheap compared to gold. Maybe swap some of your gold for U308. Sprott Physical Uranium Trust, another place to trade your dollars for something real. Only $14.33 a share right here. So I was doing some buying, waiting for this to return. The still 66.2 million pounds of U308 yellow cake sitting in a drum. It's a 10% discount now compared to the spot price. But what we're paying attention to is the term price, which is 82, which makes the discount even better. So like this one a lot. I think this is going to be a quick short-term trade that's going to be fantastic. And by short-term, I mean less than 6 months. All right, and Cameco, so up 1.3% for the week. I like that Cameco is a full-service company. You know, they're a miner of uranium, and now with their Westinghouse acquisition, they're in the power generation business as well. But the part that I don't like is that the Westinghouse part of the business is not making any money. So if they could turn that around, I might become a buyer again. If you don't care about that, the levels I like are $41.25 and $36 on the charts. URNM getting cheaper by the minute, down 4.3% for the week. So got an order in down here at $34. There's actually 2 accounts that I did it in. You can't see the arrows are right next to each other. But I mean, this is what it should look like on the chart when you buy. RSI, 29, right? Just down in the toilet. Look at how low the MACD is. We want to buy on this end of the chart and sell on this end of the chart, right? Last time uranium had this run like this, 103%. The time before that, 105, right? 165%. Just massive moves in this thing, radically volatile, and we're trying to do it again. So next limit orders are going to be down here at $30. I hope they hit. I don't think they will. URNJ is down 7.2% for the week. So first limit orders down here, $16, and then down here again at 14. I bought some here. I just forgot to put the arrow in. Okay, so that'll be in next week. I'll double check that. Let me make a note here. Circle that. Okay, check that. Yeah, so $16 and $14 for URNJ. UROI is down. How much is it down? 4.5% for the week. So I put a limit order in for this one at $1.90. I didn't think it would honestly ever hit, but we'll see if it does. I think it will. I'm pretty optimistic. I think uranium might have a little bit more leg down in it, although we got to be right there. But hopefully this gets down to 190, it'll trigger, and then we'll get in. And Uranium Energy Corporation down 1.4% for the week. I didn't think I'd be buying any more of this because I had such a run on this thing before, and then I moved to the point of no concern. Basically, what I own in this is free now for me. But it got to the point to where I'm like, I think I need to fire a little bit more on this one and run it again. So got in right here at $5.40. Got another limit order in down here for $4.50, and then a stink bid down in here for, well, I guess these are both stink bids. A last call right there for $4.12, which is just this little double bottom right there, trying to catch it and just be the last man standing. All right, and crude oil is, okay, WTI is down 0.9% for the week. So look for this one, probably going to get down and touch $67 again. Brent is flat for the week. I think it was down 0.05% or something like that. So basically flat. Look for this to get down to 72. Gold divided by oil is down. Gold underperformed by 2.6% for the week. So last week it took 42 barrels of oil to buy 1 ounce of gold. This week it is now 40.8 barrels of oil to buy 1 ounce of gold. And XLE just kind of chopping sideways. Don't really see anything here. Up 1/10%. Yeah, I don't see any buys. I don't see any sells. I don't really see any patterns now that I'm looking at this. Do we have a... And now I'm just drawing lines. Yeah, see, you really want that to touch. Nope, don't see anything here. Limit orders 83, 79, 75. XOM up 0.6% for the week. So I think we got a pretty giant bear flag right here. Looking kind of impressive here. Yes. Yeah, I do believe that is a bear flag. Okay. So maybe it's getting lower. I hope it does. I would like to see it get washed out. A girl can dream. And Chevron is up 1.1% for the week. Fibonacci extension takes this one pretty north up to like 175. I'm sorry, 165, right around there. I could certainly see it doing that. Again, on this one, I don't really see any distinguishable patterns. No, just limit orders down here, 141 and 135. And CNQ, Canadian Natural Resources, think Canada Oil, down 5.7% for the week. Still in a downtrend. Need to adjust this one to red. Still in a downtrend. Broke below. I wasn't too hot on that yellow line, but I felt like I needed to draw something. So anyone that had a limit order there, it hit. We can delete that now. Now this one I like a lot more. 26.50. You got a lot of support back here, a lot of resistance, just kind of a lot of price action around that level. I feel a lot more comfortable with that one. But, you know, if you got in at 27, then you're in. And Blackstone Minerals is up 0.1% for the week. So I was watching this one for an option, and none of the price points looked good to me. I think everyone thought kind of choppy action here, didn't really see anything, and didn't end up taking it. But up 0.1% for the week. This pays an amazing dividend. I like buys here at $14. Freehold royalties down 1.1% for the week. Still like the limit orders down here at $12.25. I mean, look at these dividends, 8.8%, 8.3% at $13. Just a killer dividend company. And natural gas down 9.5% for the week. So in a it's in a general uptrend. Okay, so we can see here that we're generally moving up here in this commodity, right? Natural gas is generally moving up, but a short-term downtrend. So we got a quick pullback right here. Might actually be a little bit of like a pennant. I don't know. I think I'm just drawing lines there. Yeah, I don't really see that. Now, I mean, it does look to me like it's going down next week. You do have some bullish signs on this. I mean, the 50 and the 20 are just like knifing up right there. General uptrend on the 200-day moving average, but it does look like it's coming down a little bit, at least initially next week. And Devon Energy down 3.4% for the week. So awesome result here with Devon. Looks like we might come in for a little bit of a double bottom right here, maybe just kind of lining up. Still have a gap back here that hasn't filled. So, maybe limit orders I like around $33. Stink bids at just north of 30. And Woodside Energy up 5.1% for the week. I might be cutting my losses on this. I probably should have done that on Wednesday. I could have got almost $16 for it. But I didn't. and moved it into uranium. This has just been a dog in my portfolio, and I question why I own it every time I look at this. Birchcliff Energy is down 7.7% for the week. So this looks like a bull flag that is kind of ironing out. Okay, so I brought up the Canadian exchange here just because there's a lot more volume and the patterns are a little bit easier to read. So if you really want this one, I think now is a decent time to buy it right here. It looks like we're going to be moving to the upside here shortly. This is the over-the-counter. So see how the chart's just a little more choppy, a little bit tougher to read. But yeah, I don't think there's anything wrong with a limit order now. You got a lot of back support back here, and then stink bid down here at the recent low, $3.15. Paydo down 5.5% for the week. Same limit orders that we've had forever, $10.65. $9.75. I think just keep them in there. Be patient. They'll probably hit. And coal is, let's see, thermal coal down 4.1% for the week. So we went from 110 to 105. I think we might need to move this thing down to, let's go an even 100. Let's see if that keeps thermal coal where it's supposed to be. Okay. We'll see if stay in their lane there, thermal coal. Met coal down 0.5% for the week. So it's obeying this 185, 180 line that we drew here. So luckily, it's not getting out of line. The coal ETF, okay, down 4.1% for the week. This looks worse than it actually is. We got some money moving into this. So this is kind of exciting. I know it doesn't look exciting on the chart, but we have almost $2 million that came into this thing that wasn't there last week, which is pretty sweet. We do have extra shares for that, so they had to issue extra shares to accommodate that. But look at some of the volumes on this in the last couple of weeks. Okay, so normally, I think when this thing was starting out, I was the only guy bidding here. It seemed like, like when I look at like the volumes on this, I'm like, oh, that was me, But now, look at this thing. Like one day, 180,000 shares. Look at this one. One day, 250,000 shares. This thing's only worth 12.5 million, right? That's some serious volume. That is, in my mind, institutional money that is coming in and buying this thing, and they had to add, they had to issue new shares to do it. You can see it a little bit better here on the weekly. So what I'm looking at is these weekly bars right here, right? That signifies volume, and it tells you how many shares are trading hands in that week. So in this 1 week, 236, in this 1 week, 323, and a lot of those were just in one day. So pretty cool. I think I might be making like one last bet on this thing. I'm not sure. I keep thinking that. And then we need to move this green line down. I'm excited about this. So it looks like some money's rotating in here. Hopefully it continues. And Glencore down 1.1% for the week. So bought some more on this one. I think it was week before last with some of the gold profits. Okay, as far as like limit orders here, I keep moving these down because I think it's cheap now, and then it just keeps getting cheaper. There might be a little bit of selling here because they're talking about moving off the London Stock Exchange. I don't really care if they do or not. I'm not biased one way or the other. But limit orders here down $7.60, and then a stink bid at $6.50. Although that sounds crazy now that I verbalize it, but I thought $9.40 was a steal, and now we're below $8. So what do I know? AMR is down 10.5% for the week. So like looking at this chart makes me wonder if I even know how to play this game. This just keeps getting cheaper by the minute. Maybe it's time to have Matt Warder back on the show. There is a lot of price action around where it is now. And basically from like 120 to like 130, there's quite a bit of price action. So I would think that would act as a semi soft floor. We'll see. RSI is at 22. How much lower can it go? RSI was at the same point down here when I bought it, 19. And it just kept going lower. So we'll see. Met coal is in the toilet, and we'll see when it returns. We need to have Matt Warder back on for that one. Excuse me. All right. And Peabody just continues to get crushed. This should have been, instead of a call option, this should have been a put option, and I would look like a genius, but we can delete that now because that thing expired. Absolutely worthless. Looks like this first level right here did not hold. Might put it down a little bit closer to $14, although it closed below that. I see a decent amount of price action right here at $10.75. I don't think it'll get down there, but that's where there is a fair amount of price action, and that's where I would put a decent amount of support. And that one is down 5.8% for the week. So basically, I've just used this as a trading vehicle, and I'm waiting for another trade setup. So we'll see. Platinum, super exciting here. This one is absolutely fantastic, down 5% for the week, and it looks like it's going to go lower. Now, could have a little short-term little double bottom right here, but I'm really starting to like the $900 level, or maybe even just a little bit above that. Sometimes I get a little too cheap, maybe like $915. So if you guys have wanted some platinum, you're here, okay? First limit order on this one, PPLT is going to be $85. Second limit order, $82.50. Third is $80. Okay, so you're right there. If you just want a position, you're new to this, and you're like, hey, I just sold my Tesla. What do I get? You know, we're approaching a good deal here. So maybe just buy 10% of your platinum position now, you know, and I don't think anyone will, I wouldn't shake a stick at that. But, you know, these are the levels where it gets like stupid cheap down here at like $82.50 and then $80. And then Palladium. Okay, we're definitely here in Palladium. Look at that, $900 level. Been talking about it for a while, and we closed it $899.70. So right there. Just look at all the back support we got right back here. And the best way to play that is PALL. And same kind of thing. Just got some back support right back there, right at this level. You know, maybe make your first entry now, and then your next one, 83, and then $80. Yeah. Kind of anywhere in that region. And if you just want one fund to do both, platinum and palladium, this is it. SPPP down 2.9% for the week. Now notice how platinum was down 5%, palladium was down 9.2%, and SPPP, which is both of these, about a 50-50 mix, was only down 2.9%. I think we have some catch up to play here. I think that this is going to go down more, and I think it's likely that some of these lower levels will get hit. So make sure you get your limit orders in this weekend, and you might wake up Monday morning and you got lucky, okay? All right, platinum divided by silver, historically cheap, takes less than a kilo of silver to buy 1 ounce of platinum, which is stupid cheap when we go out here on the annual time scale. I mean, it's just like, there's been times where it's taken 150 ounces of silver to buy 1 ounce of platinum, and right now it takes 29. Okay, same thing with gold. I mean, look at how cheap this is. You can get 3 ounces of platinum for 1 ounce of gold, and I would say the historical average is like 1.5, right? And right now we're down at like 0.3. Incredible. Very, very cheap. Okay, nickel is kind of trying to feel out a bottom here. I mean, just bottom feeding this thing down 0.5% for the week. Nickel's just getting smoked. This is a great way to see it visually. So these are all my entries right here, and just like, this is like AMR. Do I even know how to play this game? Like, just the nickel miners ETF just getting smoked right when I think we found a bottom. We haven't. So if you're new here, man, nickel is really, really cheap. I don't know when it'll turn around, but I think eventually it has to. And sometimes these things take a long time to play out, and this is an example of that. Really, really leveraged way to play nickel, although extremely risky. Down in Brazil, this is Centaurus Metals, kind of trading in this channel right here. So I'm of the mind I may pick up a tiny bit more. Like if we get just a little bit more to the downside to where it hits this bottom part of the channel, which is basically like, I mean, it's kind of now, it's basically like 22 cents. I've had this 21 cent here forever, and maybe that's just a little bit too cheap. Maybe 22 is where we should be on this over-the-counter one. And the Bloomberg is down 3.8% for the week. So much for a possible breakout in the Bloomberg. We've had a breakdown, more like a fake out, not a breakout. And iron ore, actually exactly right in the middle of these two ranges. So we got the upper range here of iron ore at 112. Bottom range at 92. We're at 102.60. I guess that's not exact, but pretty close. BHP, $48.50. That's where we had our stink bid in. Looks like it hit. It's down 5.75% for the week. I was looking at this like an hour before the market closed, contemplating putting an option on it. It was actually kind of cheap for an option. One that was only going out 1 or 2 months. And I could have got a strike price of $50, which, I could see this thing going to that or 51 or 52. Part that kept me from doing it was this dividend right here. We know that the dividend's coming in, it only happens twice a year. It's usually around the time when I run the option. I don't know. Maybe I should have taken it. I'm kind of regretting that decision now, actually. But hopefully we get a little bit more washout on this, maybe like Monday, Tuesday, and I can have a second chance. Rio Tinto down 4.7% for the week, so still like the limit order of $50. Excuse me, $58.50. Nothing changed there. Just put your limit orders in for that. And favorite pick ETF, metals and mining ETF with some of our favorites in there. I like a limit order still at $35 and then a stink bid at $33. And, maybe the story of the week, Bitcoin finally broke this $91,000 level, or what I draw it at, 92,000. Just completely fell out of bed, got caught for 2 days by the 200-day moving average. And then it even fell below that. So remember, we drew this white line a while ago and we're like, hey, should come and hit 76,000. Well, we got within a couple K of that. I think I said 76 to 78 and we got down to 78, 197. So $200 off. Close enough for government work. Almost got there. But I would expect this to come back down and this act as the new support, this white line, this 200-day act as support, this yellow line right here. And this 92,000 or 91,000 or whatever the exact number is, maybe it's 91.5. That's going to be resistance now. So really exciting there. Down 11% as of this moment. I'm recording this Friday night, and you guys will see this Sunday morning. So thank you guys for always being here. I really appreciate you guys. Love you guys. And thank you too for using all these links. That's not lost on me. All the links that I put in the notes and the pinned comments and all that. Those companies usually give me a small cut of whatever it is that you decide to purchase or not, and it also it creates revenue for me and, allows me to do more of these videos. And your donations and all the affiliate links that you guys have been using is literally paying for our editor, his wife, and his 2 kids. So, thank you for that. You're literally creating someone's job. You guys have a great rest of the day, and be sure to support the show and share this with anyone that you think needs to hear it. It's probably your buddy that can't stop talking about tech stocks. You have yourself a great rest of the day, and we will talk to you next time.